the more ego-driven type of investments, even though the numbers didn't work. Fun to talk about the big things.
Just for a little bit, do you mind drilling down on sort of what the business looked like and what, I know you said you were running too thin and maybe driving too hard, but mechanically speaking, and then we can fast forward, but what were the mistakes that were made, maybe not just by you personally, but because I know you weren't the only person, that really went through some pain at this time. What mechanically went wrong at that time?
Well, for those that don't recall, 2000, so we had the September 11th, 2001, the World Trade Center issue. And in an effort to get the economy chugging again, they dropped interest rates to zero, where they stayed for a long period of time, all the way through 2008 and 9. And so money was cheap. There wasn't a lot of requirements to get it. And so we were buying a lot of property, single family, multifamily. I was developing $20 million ski-in, ski-out houses on the backside of Deer Valley in Park City, Utah. Just had a lot of things going on in a lot of places, and it was all being done through highly leveraged property. So my real estate portfolio, for example, I had a lot of rentals that I had over leveraged to create liquidity, and then I was lending it out as a private money lender, creating notes. And when the market shifts and all of this crashes, the thing that people are going to pay on last are the real estate investments that are non-performing, the land that we had funded for new developments that were partially constructed. All of these things stopped paying, and we lost sight of what the government is always going to focus on in times of calamity, and that is affordable housing. So I started in affordable housing, very quickly ventured out of it because, affordable housing, single family, 1 bedroom, 2 bath, or 3 bedroom, 2 bath, 1,200 square foot houses, you get to a point where that just seems boring, and I want to get bigger, right?
Yeah,
I want the portfolio I can brag about because I've got 1,000 rental properties, and we lost sight of the fundamentals, and that was the fatal flaw. We got away from what is safe, what is easy, what is consistent, to chase bigger and bigger things. And not that there's anything wrong with chasing bigger things, but not at the risk of losing, your first love. The thing that we all as investors usually cut our teeth on was that first fix and flip, the 2 bedroom, 1 bath, 800 square foot house.
Yeah. Makes sense.
And so all of these things now, the foundational investments were at risk because we were leveraging them to go after the bigger and the better and the more ego-driven type of investments, even though the numbers didn't work. Fun to talk about the big things.
Right.
So what we learned from that, coming out of it, the government drops interest rates to zero. They pump a bunch of money into Fannie and Freddie, and Fannie and Freddie now come out with all these loan products that will help to bail out the U.S. economy. And the loan product that they were coming out was first and second time home buyers on what we now use, which is called our 5-point buy box. And this is properties that are under 2,800 square feet, under 5 bedrooms, 3 baths, under 4 units or less, so residential single family, under half of an acre of ground, and the retail sales price doesn't exceed the FHA cap. If we would have stayed in that lane through 2004, 5, 6, 7, and 8, we would have been cleaning up in 2009, 10, and 11 because the market just tanked. All of those types of properties were going into foreclosure, and we could have been buying them all up. But instead, we were dealing with massive default, massive foreclosure litigation, short sales. I mean, it was a house of cards, and it took a minute to unravel that thing.